What's up, guys? We're going to listen to a real quick thing here first, and then we'll get into the episode. Sorry, let me share this with... Oh, damn it.
And so that's like, but like we don't have large sample size. And the sampling that we're seeing, the sampling I'm seeing is inconsistent with the thesis that's going on. So don't deny the facts. Right? Like the way that you're going to paint a compelling picture for Bitcoin as an asset is that it has a set of return properties that are consistent with its thesis. The thesis failed, right?
All right. So that's it. Let me stop sharing. Thank you guys for hanging out. My name is Ansel Lindner. This is Bitcoin and Markets. A little bit flustered here today. So yeah, I live stream here several times a week and talking about macro, Bitcoin, markets, all sorts of stuff. I'm the author of the Bitcoin Dictionary. You guys can check that out on Amazon. Check out bitcoinandmarkets.com. Let me bring that up here. bitcoinandmarkets.com. I write a premium newsletter and as well as a free newsletter. The free newsletter comes out every Monday, so you guys can check that out. Totally free. You'll just get notified of when I drop content on the website. And the premium stuff, like this morning, I went through and broke down all the different CPI components, looked at them against each other, going back, 15, 20 years. And then in the COVID era, looked at bank credit, money printing, and what we can expect from looking at the components, looking at CPI. What are we expecting in the next year for CPI? That went out this morning for the premium members. Okay, so today what I wanted to take a look at, let me go back over to this video, and this is from Blockworks, and it's Bob Elliott and Mike Green speaking with Jack, and they're talking about Bitcoin. So I'm going to hone in on starting around minute 49. That's when they start talking about Bitcoin. And I want to go through some of the charts. I want to respond to what they say here. The main thesis or theory that they're putting forth is that Bitcoin is not a geopolitical hedge. It is not an inflation hedge. And we have to be honest about Bitcoin's performance, as you guys saw there at the beginning from a quote from Bob Elliott. Now, I'm not a fan of Mike Green. I've written stuff in the past refuting, debunking what he has said. I think he has, though I agree with some of his stuff on this podcast, this particular episode, I think it's a change from the way he sounded previously, some of his previous positions. And Bob, I follow him on Twitter. I think he has some good content. I have spoken about something else he said recently. And so there are a few things that I disagree with him on, but he does have good content. So let's dive into this right now. Let me make sure I'm sharing with Telegram. So let's play.
Mike, what about your favorite asset of all time, Bitcoin?
I'm going to slow it down. Normal.
Bitcoin absolutely requires people to keep doing something, right? I mean, Bitcoin requires all the miners to keep mining away. If they don't, then your flash drive becomes a flash drive instead of, precious and priceless Bitcoin. Okay,
right off the bat here, that is true. I mean, you can't make transactions if there's zero hash power. But a similar thing could be said for gold. If nobody is there to accept your gold, then you are out of luck. Even gold needs another party, a counterparty, to make it work. That's what money is. It's actually, transactions between counterparties. So yeah, Bitcoin mining does have a aspect like that, you must have people mining, but mining is driven by supply and demand. If the demand for Bitcoin goes up, there's going to be more hash rate that comes onto the network. If the demand for Bitcoin goes down, there's going to be less hash rate. So it's a function of demand. It's not like all of a sudden you can lose all of the hash power. I mean, that is a very tiny, insignificant risk of maybe there could be a bug in Stratum version 2, which is like some mining software. Maybe that's the case, but most likely not, to a high degree of certainty. The same way that there is uncertainty with gold, right? You have to get it assayed, and that's expensive. You can't know for sure that your gold coin is gold or your gold bar is gold. So there is faith, there is a little bit of belief in both of these systems. So I'm not saying that Bitcoin is perfect. I'm just saying that it's just as perfect as gold, if not better, because of the other monetary properties that it has.
That's been part of the argument that I've made all along on this, which is they're not actually comparable assets. One remains a liability of the network.
And I think one of the challenges is we just with Bitcoin, we just don't know how it trades as a financial asset. Like what Mike's saying about gold being a bet on real rates is something that has been established over literally millennia, right? That concept, the trade-off between gold and paper currency and yielding paper currency is something that connection, that linkage and dynamic, we've seen it across millennia, across China, the US, Europe, Japan. Like we've seen it in all sorts of different environments over those millennia to be able to, in a very compelling way, understand that is the most probable linkage. I think the basic question with Bitcoin is, who knows? Like we haven't even gone through a real recession with Bitcoin, right? The acute dynamic.
Okay, we're going to get into the relationship of gold, its performance during this high CPI era. But, we do know how Bitcoin acts during certain things intuitively, or not intuitively, but deductively. We can deduce how Bitcoin will behave. That's one of my problems as well, that we think of inflation hedges are like gold, treasuries, real estate, Bitcoin. And if there is high inflation, those things will go higher. I mean, that is deductively true. But we'll take a look at some of these charts, and guess what? It hasn't happened. Actually, bonds have gone down. Bitcoin has gone down during this high CPI era. So, do we have inflation? That's the question. Now, I was getting into it a little bit beforehand on Telegram before I pressed go live here. And the whole thing is, what is the definition of inflation and what's the definition of geopolitical risk, which they'll bring up here in a second.
In 2020, but we haven't really seen it. As a simple example, I thought it was very interesting how Bitcoin traded in response to the recent conflict in Israel, right? I thought this was very interesting, which is gold traded up, bonds rallied, and Bitcoin fell.
Okay, first off, on this chart, they're going back to the 8th. Well, the attack happened at 10 p.m. Eastern time on the 7th, or is that on the 6th? So you're missing a whole day here on the chart, first off. But let me bring up some of my charting and see. So here's Bitcoin since that time, 10 p.m. on the 6th of October. Initially, it did go up slightly, 0.5%. The first day after the attack, Bitcoin did go up, okay? So this is an arbitrary time frame. And Bob is using an arbitrary time frame. What if your arbitrary time frame was on the first day? Well, Bitcoin went higher. Guess what gold and bonds did? They did nothing because the market was closed, because they're old school asset. So Bitcoin on the first day went higher. Then by 2 days in, it was flat. It was still flat 2 days in. And remember, this is all when everything was heating up about is Hezbollah going to get into this? What's going to be the response from Iran? And then pretty much by the time Bitcoin started to fall, it was already starting to be debunked that Iran was behind this and yada, yada, yada. So in the very peak of the geopolitical tensions, on the first 48 hours, Bitcoin was flat. Then Bitcoin had 2 periods here during this time where it fell, on the 9th and on the 11th here, just over a couple hours. But if you take these 2 drops out, it is still down a little bit, but not much. It's pretty much flat, maybe 0.5% down since the kickoff at 5 a.m. Israeli time for all of these tensions. So that one I wanted to point out. But let's take a look, compare it to gold and gold and bonds. So this is what they were comparing against. So you see these straight lines right here on the left? That is because the market was closed and it gapped up. They gapped up. So that is why those are old school assets. Bitcoin actually was in the thick of it. It's actually there for you to hedge these geopolitical risks, if that's what you think is hedging, is emotionally trading. That's not hedging, okay? Emotionally trading is not hedging. But if that is what you think it is, and I think that's what Bob would say it is, and Mike, Bitcoin is the only thing possible to do that. If you have a conflict like this that starts on the weekend, and the U.S. 10-year went way out here because Monday was still a holiday in the United States. So anyway, but since then, yes, Bitcoin, as soon as the market opened for those guys, started dropping, where gold and U.S. Treasuries are up. This is inverse, obviously, so as yields go down, that means the value of the bond goes up. So that's very interesting. Let me take this out. But let's get back to Bob here and listen to some more of what he has to say.
And if you really think that Bitcoin is a contra currency that's likely to benefit from rising geopolitical tensions, right? You would have expected it to rally in that environment. And so like these are the sorts of that's a little test case, right? Like how much, gold traded the way it's supposed to. Bonds by and large traded the way they were supposed to. Equities the same way. Like how much confidence can you have in an asset that when you have what is essentially, in the obviously it's a terrible circumstance and a terrible dynamic, that's the terrible situation that's occurring there, but it is in a global context it's a relatively modest rise in conflict that's occurring, and you're seeing the dynamics of the market play out in a way that is inconsistent with what certainly I've been told by the Bitcoin community about how it'll trade.
Yes.
Well, okay, there's a couple assumptions there. Obviously, one is that it is a highly geopolitically tense time. I would agree, but I would say war with Russia is higher. Wouldn't you guys? Isn't war with Russia probably over a year's time, with you have continually escalation and you're sending in money and weapons against Russia? That is a much higher geopolitical stress level than Hamas attacking Israel in some very peculiar circumstances. So was the geopolitical risk all that high? That's an assumption he's making, that it was very high. I mean, it was higher than maybe the few hours beforehand, the few weeks or whatever beforehand, but we've been in very high geopolitically stressed time since February of 2022. And how has gold performed? How have bonds performed? How has Bitcoin performed? So, he's taking a very small snippet, and he does say that is a small time frame. But not only is it a small time frame, but it's questionable from a premise.
Was it Paul Tudor Jones who said recently that gold and Bitcoin are a geopolitical hedge?
Sure, but they traded a whole heck of a lot differently, right? And those geopolitical hedges, like the way that you understand it as a geopolitical.
So emotional trades are what we base hedge, if it's a hedge against geopolitical risk, we base emotional trading. I would say actually that's a negative for gold if it is based off of emotional reactions. Where Bitcoin, you saw 48 hours from the time of attack, it was flat. That's not emotional. That's very stable.
Hedge is based on the fundamentals, which I think Mike has highlighted a very important part of the fundamentals, which is you do have a liability. Gold, if it's in your pocket, essentially, other than confiscation is in your pocket, right? You control it, right? It's a liability to no one. Whereas, Bitcoin is reliant on technology, engaged, run by other people. And so from the fundamental perspective, there's a question, and then it just comes down to the empirics. And that's the point, is if you're going to protect yourself from rising geopolitical tensions, like one asset has millennia across geographies telling you how it performs, and the other has, nothing, essentially no sample size. There is no sample size on Bitcoin's performance in rising geopolitical tension. And so if you're a saver, you have to recognize.
See, that's the thing, is I would say the whole last, when did Crimea and all that stuff happen? 2014. Bitcoin was around then. Bitcoin has been around this whole time. One of the things like Peter Zion has been saying is that, and if you mix Peter Zion with Jeff Schneider, so things happened in 2008 that completely changed the system. The US started going more towards, at least politically, towards isolationism and deglobalizing. Now we're going into an era of deglobalization. Geopolitical risks have risen for the entire lifetime of Bitcoin. And there have been very big flashpoints in the time that Bitcoin's been around. I mean, there's been a war on the border of India and China, or not a war, but they actually traded blows with fists actually on the border of India and China. We've had major countries that have had revolutions. Syria situation. We've had the Crimea situation originally. We had then we had Ukraine this time. Now we have Israel. It's not like geopolitical tensions have not been high the whole freaking time. The sample size of Bitcoin's performance is Bitcoin's entire life.
The uncertainty, you don't know how it's going to perform in that environment because we haven't observed it. Like, your confidence just has to be very, very low in terms of how it'll do it. And the stress test that we saw in the last couple of days was a fail.
Stress test, emotional trading off of misinformation. We don't even know what happened. We don't even know the story behind the initial day, why there was such a big failure, why they were warned 3 days beforehand and then they failed to protect the border. We don't know why. There's all of we do know why, but we didn't know for a fact that all these atrocities that they're talking about are real. We don't know why. It's all emotional. And this is also another thing. So if you have an asset that is supposed to be a hedge against geopolitical risk, what is that supposed to mean? I mean, it doesn't mean that it responds emotionally, right? Like, it's kind of crap until all of a sudden somebody bombs somebody and now it spikes. That's not a hedge. That's like an emotional market, right? A hedge, a geopolitical hedge or risk against a hedge against geopolitical risk is something that maintains and is calm and continually goes higher or maintains its value for a long period of time, is not concerned by the outside world because it taps into something more fundamental. That is a hedge against geopolitical risk, not an emotional reaction.
That's a very short sample size. We cited about a recent underperformance.
That's Jack. That's part of Bob's response, though. I mean, that's part of his comment, right? Yes, it's a short sample size, but we don't have any sample, right?
I agree, and also the sample size since 2009 is like, I would not advise people to say, oh, it's averaged a 90% or 150% return since 2009. It's like, yeah, well, it was at 0 in 2009. So,
but guess why that it was apparently one of the reasons why it was created, was the bankers on the brink of second bailout. Or what was it? Chancellor on brink of second bailout for banks. That is geopolitical risk, okay? A giant credit collapse is a geopolitical risk, which birthed Bitcoin in the first place. Now, then all this time we had we had Cyprus we had the Arab Spring, we had Crimea, we had rising tensions with China, actual war with Russia, NATO and Russia actually going very close to war. I mean, it's not like all of a sudden 6 days ago during this Israeli thing, that is the single solitary sample that we have for Bitcoin in geopolitically risky times. It's absolutely ridiculous. I don't understand how these people can actually think that. Bitcoin was born of geopolitical risk. It was born of inflation and, well, bailouts, crises, financial crises, global crises. And it has been fighting all along through every single thing that's come up. And what happens? Bitcoin goes higher. Bitcoin goes higher. Bitcoin goes higher. Please give me a break.
For those returns to continue, it's going to have to be $5 million pretty soon. You know,
Rising geopolitical tensions. Did it go up or did it go down?
down to
In
flat.
the last 6 days.
Flat-ish.
Did gold go up or down?
Gold went up.
Right.
Gold went up, and Bitcoin
Gold went up, and gold went up a lot. Gold performed just as it's supposed to perform. And so that's like,
Yeah.
But like, we don't have large sample size.
Okay. Gold is not supposed to perform by popping in price emotionally when two tiny countries get together and there is some rise in geopolitical tensions. Actually, I would say geopolitical tensions are lower today than last year at this time because of the Russia-Ukraine stuff and the escalation that kept happening. So gold is not supposed to pop like a Wall Street bets stock because of geopolitical crisis. Gold is supposed to maintain. That is what a hedge is. So he's wrong here. Bob is wrong. It didn't perform the way it was supposed to. It actually performed emotionally, which is not the way it's supposed to perform.
And the sampling that we're seeing, the sampling I'm seeing, is inconsistent with the thesis that's going on. So don't deny the facts, right? Like the way that you're going to paint a compelling picture for Bitcoin as an asset is that it has a set of return properties that are consistent with its thesis. The thesis failed, right?
No, it didn't. But okay, let's take a look at some other stuff here. Let's take a look at the gold chart. And I included back here to 2022 because, February 24th, 2022 is when Russia invaded or Russia went into Ukraine. And yeah, gold spiked here into March, but then it went down, breaking down below these support levels. So this was a long-term support level. Gold actually broke down, even though this was highly, highly geopolitically tense. And this is a big sample size. This is March through November, when World War III is literally on the steps, and we are sending weapons, HIMARS, rocket launchers, and tanks, and billions of dollars into Ukraine. Yet gold goes down. I mean, Bitcoin went down too, but what is your sample size here? Now, this I put over here on the right-hand side because I think it might have been on one of my premium newsletters. I'm not sure. I was talking about gold. And I called this out, first off, this bear div up here. So what I did was then I put a fib on it to see what we were talking about here. And we were getting close back to the golden pocket retracement, back to the 61.8 Fibonacci. And I called this out at the bottom, maybe a day or two before the bottom. The RSI was completely oversold. It was the most oversold RSI for several years, down to 19 on the daily. And I said, we're going to rally here. We might dip down, touch this 61.8, and then rally. This was not due to Israel, guys. This was a technical move in gold and perhaps emotional, but it probably wasn't emotional. It probably wasn't even trading off this Israel-Hamas thing. It was trading on a technical basis. So Bob, on a technical basis, it's just straight up a simple technical move. I got more. I got more. Let's see. What else do I want to go to? Okay. How about this one? This is the U.S. 10-year yield. As it's going up, that means it's losing value, right? The bond is losing value, or the treasury, whatever, is losing value. And so I included 2022 as well here, and you can see pretty much what has happened since rising geopolitical risks in Ukraine with with Russia versus NATO. What happened to the 10-year yield? I mean, that's a much bigger geopolitical risk than Israel. Funny enough, not guarding their borders that are like the most high-tech border in the world. They weren't home. It's not geopolitical risk over the last 6 days. But what happened here? 10-year went up. That means bonds went down, actually. Did they fail their thesis, Bob and Michael? Did they fail? Did the Treasury market here fail its geopolitical stress thesis? I don't think you would say so. And this is a long history. 18 months at least. What is that? About 18 months where the price has gone down. What else do we got? Let's take a look here at some other inflation hedges. This is not maybe a geopolitical hedge, but this is an inflation hedge, supposedly. This is the Dow Jones All REIT ETF. So this is all real estate REITs is in an index. And you can see it peaked right here at turn of the year 2022. It did go up slightly in late February to late May, but it has been down as well. This is an inflation hedge during high inflation times, and it went down, or high CPI time, and it went down. Very interesting. Is that contrary to its thesis? And so here we do have Bitcoin going the same time frame back to 2022. Same thing, just like the REITs, Bitcoin did go up from the Ukraine invasion for about a month. It did respond positively to the rising geopolitical tension, but then it fell. I mean, there's all sorts of stuff in here that's nuanced to the Bitcoin market. Over leveraged, Celsius, Terra Luna, all these other things that all went bust. FTX down here, November 2022. So there's some intricacies to this market. But if you take out these crashes that were obvious, like liquidations of long-term leverage in the system, it would be relatively flat to higher since the Ukraine invasion. All right, interesting. Interesting. Let's go to, we did that one. All right. And you did talk some about gold and Bitcoin having an inverse relationship, and I've talked about this recently. Let's see did I have another one? No. So this is the Bitcoin versus gold chart, and I put it back on, I think it's the 26th of September, is when the relationship, the correlation between Bitcoin and gold flipped to indirect. It had been direct for months and months and months, maybe a year. And then it flipped to indirect starting on the 26th of September. And you can see what's happened here during this period of geopolitical tension. I mean, we had, not only during this period did we have Russia and Ukraine, but we also had Israel kicking off. And Bitcoin is up since it's been decoupled. Up 2%, while gold is up less than 1%. Even with the recent rally in gold, imagine if it was before this recent rally in gold, it would be down to -1 or 2% during this period. Okay, what else do we have? Let's listen to a couple more minutes.
And that is very, very important when you're thinking about it as an asset. Like, we can't deny the thesis. We can't deny the empirical evidence when it runs counter to the thesis.
No, his idea of the thesis is wrong, and his idea of the evidence is wrong. Sorry, Rob.
I just say we need more time, as you say. Like, the Bitcoin as an inflation hedge, I think we have enough data for inflation rising in 2022 for it failed, but it's been a few days. So
I hate to be a broken record, but I just want to restate this. So The geopolitical tensions over the last few days are peanuts compared to the last 18 months. We don't even know why what happened in Israel happened, why they didn't have their border, why they had their border unmanned, basically. This is not real geopolitical tension in the same sense as nuclear war with Russia. All right. The reason why gold and all this other stuff moved was not in reaction to that. It was a technical move. Same with Bitcoin was a technical move. Period. It didn't fail anything. Bob says, let's be honest about the facts. Let's be honest about the facts. Explain all of that move since Russia invaded Ukraine.
If that continues, then yeah.
Jack, I just want to make sure I understood. You're saying that you have enough evidence that Bitcoin works as an inflation hedge, or it's a fail as an inflation hedge?
No, that it failed as an inflation hedge, at least if you don't do any lags, which some people do.
I personally agree with that. There's a lot of people that would point to the rise that it experienced in 2020 and say, oh, it was a fantastic inflation hedge. It just predicted it in advance, right?
Yep, that's what I meant by lags.
You mentioned Paul Tudor Jones, right? It's the best of the inflation trades. No, it actually just has, this goes back to exactly the points that I was making around target date funds or systematic allocation strategies. It has the most vociferous and, maniacal holding base that basically is unwilling to supply any as the price goes higher, right? It has that characteristic that as it goes up, people are convinced that it's actually demonstrating the validity of their arguments, and therefore they're more willing to hold as it goes higher in price. That's just another way of saying it's highly inelastic in its construction.
True, and the other thing to say there is it's a Veblen good. Its demand goes up as price goes up. Its demand goes down as price goes down. This is something common I have been saying personally for probably 8 years, and others before me have been saying probably for 10 years about Bitcoin. It's a Veblen good or Giffen good. Yes, it has a perfectly inelastic supply, total, like theoretical supply. You can have supply in circulation go up and down, and some paper Bitcoin or credit going up and down. But the supply is very inelastic. But I also want to take umbrage with what he said about people will hold it tighter as it goes up in value. No, they won't. There's always a level where somebody will sell it. As price goes up, it's going to trigger more and more subjective valuations of a fair market price. Maybe somebody that bought it at $20,000 thinks a fair market price is $100,000. So when it hits $100,000, they're going to take gains. Maybe somebody that bought it at the $20,000, maybe they think the fair market value is $250,000. And when it gets to $250,000, there'll be a rash of selling because it has triggered more subjective valuations of fair market value. So that is not the case. But the overall demand goes up, not an individual's demand, subjective value of it doesn't necessarily go up. It's overall demand. So for everybody that gets triggered to sell at 100,000, 2 people are being triggered to buy. So it's more nuanced than what Michael here is saying. But they were talking about inflation hedge, so I wanted to get over there. I only have a couple minutes left in this episode. This is CPI, US CPI. This is the absolute CPI. So it's not percentage of year on year or, like 5% a year or whatever. This is the absolute growth of the basket. And what I did was I put it at a low back here. This is arbitrary. I understand that. But what I did was I put it at the low month for the CPI. So the CPI actually, after COVID, dipped for a couple months, had negative CPI, and then it started going up. All right, so I put the starting point from there. I think it was June. This looks like maybe May or June of 2020. And look what happens, okay? So this isn't on the same scale though. This is 19% the CPI has gone up from the lows, 19% total. And Bitcoin has gone up on a different scale, 176%. Even at the biggest drawdown of Bitcoin, it was about 60% up from when CPI started going up. Gold is 10%. It's below what the CPI is. It did not keep up with CPI. Bitcoin blew it out of the water. Let's go to this next one. This one, I just normalized it. I put them all on the same scale. I didn't put the CPI on the same scale on the last chart because it's hard to see. But you can see that US CPI and gold are down here and Bitcoin is way up here. So what exactly is an inflation hedge and what has it missed? Okay, and another thing, this gets into the whole thing. So Bob Elliott just went on a rant about being honest about what is going on. Okay, let's be honest about what is CPI and what's inflation. You know, we had a huge geopolitical tensions where a major OPEC plus member, a big energy producer, invaded a hopeful NATO country or another very large producer country. Pipelines were destroyed. Huge geopolitical tensions, huge rise in oil, huge rise in other commodities and things, which is not inflation. It's not money printing. That's obviously people that listen to my content. That's my big thing is it's not CPI is not money printing. So we shouldn't really even compare Bitcoin's performance to CPI. If we're talking about an inflation hedge, we shouldn't compare it to CPI because CPI is not inflation. It's a basket of prices that tries its best to be a proxy for inflation. But you know, if we really wanted to measure inflation, we should just count the money. But M2 is not that. You know, there's money in the shadow banking system that we can't count. There's collateral and money, cash equivalents, etc. We don't know the supply of money. CPI is a way to estimate it. But it is not inflation itself, it's prices. So Bitcoin is a hedge against CPI, as you can see here on this chart. And Bitcoin's entire lifespan, the entire time Bitcoin has been in existence, has been a period of high geopolitical risk. From global financial crisis to Arab Spring to Syria to ISIS to all sorts of things, Crimea, Ukraine, and now Israel. The entire period of Bitcoin's history has been geopolitical crisis, growing geopolitical crisis. This Israeli thing, the performance since then, has nothing to do with Bitcoin's thesis. So anyway, okay, guys, that's where I'm going to leave you. Thanks for joining me. Ansel Lindner, Bitcoin and Markets. Check out bitcoinandmarkets.com, and I'll see you guys on the next one. Bye.